Welcome to the Nexus Point. We are Rich Romero and Geoff Bruskin, and this is the podcast for next generation accounting firm. Welcome back to the Nexus Point podcast. As always, today it is Rich, and we are with managing partner and CEO of White Tiger Connections, Geoff Bruskin. How are you today?
I'm doing great. How are you, Rich?
I'm doing well. So today we're going to do something a little bit different. We're going to get like a straight up sampler, some real deal anecdotes, straight from you and from the trenches. You've closed and advised on several transactions, and you've seen the good and you've probably seen some bad. So for this episode, I was just hoping that you'd be willing to share some of those things that you've experienced, maybe what you learned, and just provide both sides of that story for us. So to kick us off, tell us about a deal that looked perfect on paper, but maybe fell apart at the last minute, and what exactly maybe went wrong.
Yeah, so one comes to mind off the top of my head. A couple of years ago, this is a $1.5 million tax firm where the owner was pulling $1 million out of the business. So highly profitable, high net worth, ultra high net worth client base, had some star athletes in his book of business based in the Southwest of the United States. And we had, built a great relationship with him over many quarters, probably 3, 4, 5 quarters worth of relationship work, introduced him to a handful of parties, and had one buyer who's doing an accounting firm roll-up, is a CPA himself. And the multiple was strong. So it was 1.35 times gross, basically just over $2 million valuation. And he was going to get 80% of that cash up front. Would have perhaps been a stronger multiple, just for our listeners to hear, in the event that this gentleman had more staff infrastructure. But he basically had, a bookkeeper, a part-time CPA who was in his 70s, and an executive assistant, and that plus his software and some rent, equaled out to $500,000 in expensive. He's pulling $1 million. It was a, dare I say, lifestyle business for him. He's working 55 hours a week during busy season, 15 hours a week during off season. And so great little business, and he was ready to, go hang out with his wife and do his thing, not needing money. So we were really far down the path. We had a signed LOI, quality of earnings process was complete. We were on the legal diligence, and the buyer, Rich, just kind of like fumbled the ball on the communication dynamic during legal. And I think this is such a great example because the seller was not a high maintenance guy. He had really he was chill, not inflated expectations, didn't need to be soothed or have his hand held or anything like that. Buyer had said he was going to, attorney was going to get stuff by a certain date. The attorney didn't. The buyer didn't communicate about it. I followed up with the buyer. Buyer didn't get back to the seller. I called the seller, exasperated. I don't know what to tell you. I mean, obviously, this is, an emotional process, especially as we get into the final innings. You're handing over your baby, even in the context of you maybe not having a ton of leverage. 20% isn't a lot, especially when this guy was doing so much of the work, right? But nevertheless, feelings matter. And the way that we get impressions about people matter, especially in the closing innings. And the seller pulled out, and he was like, I just don't have a good feeling about turning over, this business, my clients that I care about, to somebody. Geoff, find me somebody else. And the buyer was like totally blindsided, did not see it coming. And I was like, I tried to tell you, and emphasize that, like, how important connection and communication and just proximity is, especially as the intensity towards a close heightens, because usually the way that we date is very much the way that somebody is after we get married. And so there are signs, and you should pay attention to those signs. Certainly as veterans in business, we hopefully do pay attention to those signs. And actually, funny kind of end to that story, that guy ended up getting a $5 million cash offer for his business, which of course he took from a investment banking firm that was so wowed by his presence, the CPA's presence. They convinced him to stay on for 5 years, just as like an emeritus sort of advisor. And they gave him a salary on top of a $5 million cash offer because of the value that he could bring, they felt, to their clients. So that's kind of a wild story. We didn't make any money on that one, but sometimes the lessons outweigh the financial impact.
For sure. And I do like that you mentioned the dating metaphor before you get married, because and in this case, it took a little while longer, but it still came to a head, and seems like for that person at least, and like you mentioned, the lesson learned is very valuable, and for the seller, it turned out to be valuable for them as well. So on the flip side of that, though, I would, if you could, like for you to share, a win, where everything just clicked. Maybe the buyer and the seller, again, that relationship, that connection, that communication, was solid all the way through. The deal structure was perfect. It worked out for everyone. And just more of those details of why it maybe worked so well.
Yeah. So one comes to mind. So this is a business, also a tax shop, 5 million in revenue, over 2 million in seller discretionary earnings, single partner. We closed this deal in 2025. One and dones, as I call them, Rich, are always really nice. These are the ones where you make one introduction and you have a deal. And to build that level of credibility with a seller is really hard to do, because, a seller, is going to work with a broker because they have a high degree of confidence in the broker's ability to put them in front of the right people. And so you can just imagine how much kind of credibility and trust goes into that, especially for someone, they're not running a $500,000 business and pulling 200. They're running a $5 million business and pulling more than 2 million, not an unsophisticated person at the helm of that ship. And yet the buyer that we put in front of this gentleman was a private equity firm. They'd done dozens and dozens of deals in the space. They're very much a boutique special office kind of private equity firm that just has a phenomenal process. And the deal that he signed, I would call it like maybe an A-, which was great because, he's not, obviously everyone wants to get the best deal possible, but, not a predominantly money motivated person. Again, very much wanted to make the right deal with the right party. And he really liked these guys and they absolutely loved him. And so the deal was just under 12 million in enterprise value. He received the vast majority of that cash at closing, a very strong salary, a small promissory note, which is different than an earnout because a promissory note is guaranteed, where an earnout is not. It's based on revenue retention or EBITDA retention, depending on how the earnout is structured. Promissory note is guaranteed and has interest on top of it. It's actually kind of like just basically like part of the down payment, but usually it's like, with prime interest based on whatever time horizon after close it's paid out on. And then he rolled some equity as well. And a year later, that deal is going exceptionally well. It was a fantastic decision for both of them. And the biggest thing was just the personalities, and the process was so tight, strongly contrasted from that last deal, maybe as strongly as possible. And everybody won in the end.
Yeah, but and like you mentioned, though, I'm sure a ton of lessons learned from that one too. So it's always, we always try to pride ourselves on learning through all of these processes as well. So yeah, that's awesome. And maybe a slight kind of change, but still kind of focusing on, finding success in the deal. But maybe you can pull out a time where, the talent or the tech really was kind of like the hidden key to a deal being kind of consummated and things like that.
Yeah, so I'll talk to one about talent. So the largest deal that we've done as a firm was a $20 million valuation as of the recording of this episode, March 2026. It was a 5-partner firm with a specific subject matter expertise, Rich, and niche expertise. All 10 million of the revenue was in that particular niche. And it was so about 10 million in revenue, about 5.3 million in non-adjusted EBITDA, right? So that's with the 5 partners compensation, and roughly 3 million less than that once normalized based on the partner compensation. So you figure, $600,000 per partner is what they calculated the fair market value of that expertise would be, if they had to replace any of those individuals. And there was 1 to 2 partners who were going to be imminently retiring in the next 2 to 4 years. And 1 partner retiring maybe in 5 to 7. So certainly some talent dynamic shifting over there. And they just had such an incredibly strong bench of folks who were at the senior manager and the director level on their way to up and coming partners that there was just a lot of confidence by the buyer who ultimately bought the business that they were going to be able to navigate those retirements. And the reason, in case anybody's wondering why the seller didn't just sell internally to their team, was because they wanted more cash at closing than their team was comfortable giving to them. And really, their team was not necessarily in kind of a business owner sort of mindset. And so a super attractive business, even for, say, a large CPA firm that didn't have a practice area specialization in this particular niche because of the depth of talent that they had. Ultimately, they got just around a $20 million valuation, which was, just under a 10 times adjusted EBITDA multiple, and a fantastic deal structure, a lot of cash at closing, the rest, a lot of promissory and a very small earnout, which was just going to take place over kind of the ensuing 2 years up until those two most senior partners were kind of ready to retire. And, that's the case in a lot of these firms where, they don't necessarily have kind of the next generation that necessarily wants to come into ownership. Other firms do have the next generation that wants to come into ownership. But this firm that ultimately bought them actually did have the practice specialization, not nearly $10 million worth of it, but they were in a similar geography, and they already did have some bench strength in that same geography, in that same discipline. And so there was just a confidence in being willing to give a really strong multiple and valuation in this unique expertise.
Yeah, it just goes to show that, having that talent infrastructure can go a long way for, different types of firms. So definitely important story there. And now our listeners know, and I know you do like a bunch of consulting, fractional COO work. And of all of that work, I just want you to tell me, like, maybe it's, post deal where you kept assisting with a firm, or just in all of that work, tell me your favorite kind of anecdote there, or something that, you learned along the way, or that you were able to help a firm kind of overcome and achieve as you kind of assist them with their goals and all of that stuff.
Yeah, that's a great one to think about. So I'll talk about a deal I did on the West Coast. It's a $3 million firm, about $1.6 million of seller discretionary earnings, single partner, combination of tax, accounting, and business management. And it's just he was a great guy. So you deal with a lot of people. This is the kind of guy that I would have hung out and his family and my family kind of thing. We're on opposite coasts, so never met in person, but just someone who you really enjoyed spending time with. You could see why he was so successful. And I introduced it. He wasn't a one and done rich. He was a two and done. He chose, actually a deal which was less monetarily rich, but also less risky. He felt, because the other party, who was more aggressive, was they were acquiring their first CPA firm. This was a wealth management firm. Whereas the firm that he went with was an accounting firm themselves, and was executing a kind of a roll-up strategy. And I haven't necessarily continued consulting with him post acquisition, but we've stayed in touch and continued talking. His valuation was just under $6.5 million, majority cash up front. He rolled equity in that, and he had a key staff member who was not one order of magnitude more junior than him, but was 2 orders of magnitude more junior than him, as well as a director of operations who wasn't client facing, kind of ran the rest of the business. And so that person who was 2 orders of magnitude below him has now risen, is actually about to, a couple of years later, take on an income partner position with the firm that acquired. They're very happy, which is great. And I've just stayed in touch with him because he's just a great guy, and it's been great to kind of see the success. So we do a lot of fractional COO work for firms now, and we've only done that for 12 to 18 months or so, whereas we've done deals for 4+ years now. So it's nice because we're starting to see some of the COO work that we're doing levying itself to these clients either exiting through us or now being ready to buy. Maybe they had to get some things in order before they were ready to buy, and we helped them with that. And now they are ready to buy, and we're helping with the sourcing side of things for them. So I do expect that in a year, when you are, we're doing a repeat of this episode, be able to talk through some like dynamic consulting engagements that have continued after acquisition, especially when it involves kind of a sibling category that's acquiring, a business that they don't already have that functional expertise, like an RIA buying an accounting firm, as an example.
Yeah, well, and I'll be looking forward to that episode as well. And the last thing, and you might find this either really easy or really hard. Just one piece of advice from all of these anecdotes that, like, what would that one piece of advice be for our listeners, for people in these situations? As the market is constantly changing. People are looking to sell. People are looking to buy. What would be your one piece of advice from all of your experience?
I would give this advice to a 17-year-old, and I would give it to a 70-year-old. And when I speak with somebody, so much of this world that we live in today is digital, but I feel like this is true whether you're in person with somebody or whether you're on camera with somebody or whether you're on the phone with somebody. You can even, I think, pick up on it over email and text message sometime, but at least face to face, even if it's just digital, you get this. Some people have a certain signature about them. And, maybe you call it an X factor. I don't really like that. I think there can be people who have an X factor, like, sort of Wall Street, aggressiveness capacity. The signature I'm talking about is more of a sort of human signature where, in my world, competency is table stakes, right? I'm dealing with, successful business owners all day, every day, millions, sometimes tens of millions in revenue, shareholders, CEOs of these firms, in many cases, private equity principals and fund managers who have the keys to hundreds of millions of dollars, even of capital. And I don't really care about any of that. I very much care about there's a certain something that I listen for. And for me, I know I have family who works in my business with me, Rich. Some people maybe are more visually focused. Something for me about auditory, I can hear it and I know it when I see it, right? Or hear it for that matter. And it's just that there's a quality that some people have that makes me feel like I can trust them. And obviously, I don't just throw, myself before these people. I need to get to know them better. I need to listen. But it's a combination of competency, which, as I say, I think is table stakes. And it's that they're actually in it for all parties in every conversation that they have. They want everyone to win. They don't have a zero-sum attitude. And so these are the relationships that I endeavor for in my advisors, my mentors, the people who I surround myself with in my business, and absolutely in my clients and the vendors, the service providers who service our firm. So I would just encourage you, whatever phase and whatever journey you are on, buying, selling, growing, destiny, discovery, as you go about your search for these people, and I'm probably telling you things you already know, maybe just articulating it a little differently, look for that signature. Don't jump at the thing, necessarily even the person who has the fanciest resume. It's very much about the quality of the person who you're working with. And we all kind of pick up on that in our own way.
Yeah, for sure. And all of that was great. And I think it's just proof that, deals and, this work and, the mission and all of that stuff it's so much about the people and not just the numbers in it all. So and that's how I want to leave that off for today. It's a lot about the people. There's so much, froth, as we like to call it. There's so much, but when you come back and you really are surrounded by people that you trust and feel like you can build with, you can go a really long way. So, as always, we appreciate you guys listening in. And if this again hit home for you, please share it with your peers. And you can find us here again next week.
Thanks, Rich. Take care, everybody.
Bye. Thank you for watching the Nexus Point. See you next time.